Hello investors, welcome back to the channel. For today's video, I'm going to show you that the portfolio has just hit an all-time high record. I'm going to show you how this information can also help you get started with investing. If you are new here, my name is Tim, and on this channel, I try to do as much as I possibly can to help you push your portfolio to the next level. Now, I am that guy that went ahead and started off this portfolio with $65. The reason I did that is I want to show everyone that it does not matter what amount of money you have, you can get started with investing today. In addition, with my initial investment of $65, I made a pledge to go ahead and add $250 to this account portfolio every month. So far, the portfolio has grown by the $250 and also the capital appreciation, which I'm going to walk you through today. In addition to that, I took the money I started off with, which is just the $65, and I went ahead and allocated that $65 to 10 stocks only. Now, if I had to give anyone advice, which I should not because I'm not a financial advisor, however, I would highly advise that you do not pick individual stocks, especially if you are new to the market. And if you are new to the market, your best bet would be to go ahead and get invested with ETFs. Now, in order for you to go ahead and get started with investing, like I mentioned before, you could go ahead and start with any amount of money. Go ahead, sign up for any brokerage account you have there. The majority of them do allow you to go ahead and get started with fractional shares. Once you do that, make a commitment to yourself of where you want to be 5 or 10 years from now, and let that be your guide for you to go ahead and decide how much you want to contribute on a weekly, a bi-weekly, or monthly basis based on your portfolio goals and based on money that you would not need in the short term. Now, the 10 stocks I went ahead and got invested in, I'm going to be going through it with you. Now, first of all, for those of you new here, I'm not very big on cryptocurrency. However, this is complimentary cryptocurrency I received from Robinhood. Now, the portfolio buying power or my liquid capital or my 10Ds is at $5.43, which is very low. Now, I tend to keep this very low because this is not a margin account. I don't have to be worried about a market pullback. So let's go ahead and get into this 10 stocks. So my portfolio, I went ahead and divided it into three. The three categories I divided into was going to be value stocks, of which I have four. Then I went ahead and added dividend stocks, of which I have four. And then I added two growth stocks of just two. So that makes the entire portfolio equal to 10 stock portfolio. Now, as you can see here, the majority of my stocks are up, except for New Holland, which is still down. Now, the market is in an upward incline right now, and it happened very drastically based on market conditions. But that does not stop the fact that because I went ahead and invest constantly, that's why the portfolio is up. Now, let's go ahead and get into the first stock, which is going to be Amazon right here. So, with Amazon, as you can see here, I am making this video in the aftermarket hours, and Amazon is actually shooting up after hours. I did try to go ahead and see why this is so, but I've come to realize it's not earnings as yet, so I have to do a bit more research. Now, with Amazon, my total amount invested is going to be $129. How I got this far is because I went ahead and did an investing model known as the DCA, or the dollar cost average model. What that does, it allows me to contribute a fixed amount into any stock on a periodic basis, and that allows me to grow the portfolio and grow my position in any individual stock. So thus far, after adding $25 on a regular basis, the market value now stands at $129. Now that $129, $14 of it, or 12% of it, came from capital appreciation. So with Amazon, I'm actually up right now. Let's go ahead and get into the other one, which is going to be Microsoft, and that ticker is going to be MSFT. Okay, so here we are on Microsoft, and the total market value of my holdings is going to be at $141.22. And of that, part of it is the amount of money I invested towards it, and part of that, which is going to be $1.05, is just going to be the capital appreciation. Now, once again, this stock too, I went ahead and did the dollar cost average model, and I am contributing $25 into this portfolio. This portfolio is what I like to refer to as a set it and forget it portfolio. The reason why is the set it and forget it portfolio is that all my investing right here is going to be on automatic. Automatically, $250 comes into this account. Then that $250 gets spread across the 10 stocks I have in the portfolio without me doing nothing. I do not even need to watch this portfolio. Every time I make a video for you guys, I go ahead and look at the portfolio so I see how it's doing. So let's go ahead and get into the next stock. And that next stock is going to be one of the favorite stocks right now, and that's going to be Meta. And that ticker is going to be META. Okay, so before I go into Meta, if you guys are enjoying the content so far and you guys are enjoying my transparency, then go ahead and give the video a like and also just subscribe to the channel. That's really going to help grow this channel and have others see these kinds of video and let them know that it does not matter what amount of money they have, they too can start investing today in order to see the benefits later on. Now with Amazon, my total market value is going to be $123.29. Of that, $323 is going to be capital gains. Now, when I say capital gains, this is what's known as unrealized because I have not closed out a position, so it's unrealized. If I do decide to close out the position, which means I go ahead and sell the stock, then that position now changes to a realized position, and that realized position is what's going to be taxable. But that's going to be for later on down in this channel. So as you can see here too, I am contributing $25 through Meta on the DCA model as well. Now let's go ahead and get into the last value stock, and that's going to be Google. And just for clarification purposes, the Google I have in my portfolio is going to be Google Class A. Google do have two types of stocks, which is going to be Class A and also Class C. So just scrolling down here, my total market value of Google is going to be at $150.94. And of that, $10 is going to be the capital appreciation. Once again, $25 of my monthly is going to be going towards this stock. So Google is doing very well. So far, I am up on all of the value stocks in the portfolio so far. So let's go ahead and we're going to jump into the dividend stocks right now. And we're going to go to this first one, which is going to be Chevron or CVX. Now, with Chevron, as you can see, the share price is $183.35. But once again, that does not matter because of the strategy that I'm using. Now, my market value here on Chevron is going to be $88.54. And of that, $3 or 3% is going to be in the form of capital appreciation. And that's also going to include dividends. Chevron do go ahead and pay dividends. Now, with Chevron, with the DCA I'm doing, I'm only contributing just $20 on a monthly basis to this stock. So let's go ahead. I'm going to show you the dividends that Chevron is paying. That's going to be another income factor. So here I am on my history, and as you can see, I've already gotten around 47 cents in dividends from Chevron. And one strategy I'm using with this is what's known as the DRIP model. DRIP stands for Dividend Reinvestment Program. Now, the reason why I'm doing the DRIP on these dividend stocks is that it allows you to increase your portfolio value of that certain stock. So the next time when dividend comes around, you're able to get more dividends on your current investment and the dividends that you went ahead and added back to the portfolio. So let's go ahead and we're going to get into the second dividend stock, which is going to be one of my favorites of all time, which is going to be Realty Income. And that ticker is going to be simply O. Okay, so here we are on O. And my market value of O is going to be $114.96. The amount I'm up is going to be $4 or roughly around 4%. With O as well, I'm contributing using the dollar cost average method. I'm contributing just $20 a month. Now with O as well, this portfolio is up for capital appreciation and it's also going to be up for dividends because O do pay dividends as well. Now let's go ahead and get into the third dividend stock I have in the portfolio, and that's going to be ticker MO, and MO is for Altria. Now Altria is what's known as one of those very high-paying dividend stocks. So I like having this one in the portfolio. So let's go ahead and scroll down, and as you can see, my total market value for MO or Altria is going to be at $107.28. Of that, $228 or 2% is going to represent my capital appreciation and also dividends. As you can see down here, I also do have another dividend coming to the portfolio, and that's going to be $1.11. Now, this may look very small to you guys, but one of the best and most important parts about investing is going to be compounding. Compounding is how your portfolio keeps growing over time when you do simple things like keep reinvesting the dividend and keep reinvesting the same amount using the dollar cost average method. Trust me when I say your portfolio will grow over time. Now, with the other two dividend stocks in the portfolio, I'm going ahead and do a DCA model of only $20 to this stock. Now, let's go ahead and jump into the last dividend stock that the portfolio has, and that's going to be none other than ticker PEP, which represents PepsiCo. Here we are on PepsiCo, and the current share price is $156.78. My market value, however, is going to be $86.54, and of that, 0.94 or roughly 1% is going to represent capital appreciation, and once again, dividends. This too, I am contributing $20 using the DCA model towards this, and I also have my drip turned on with this stock. Now, with all my dividend stocks, I have turned on the drip. DRIP, once again, stands for Dividend Reinvestment Program, and it's a strategy that's used whenever you get your dividends. You're going to automatically reinvest those dividends. So the next time dividends are paid out next time around, then your dividends become even more. It's a simple strategy that helps your portfolio compound even faster than it would on a usual basis. Now we're going to go ahead and get into the last two stocks in the portfolio, which I have here primarily for growth. One of those is going to be Oscar Health, and that ticker is going to be OSCR. Okay, Oscar Health share price is at $16.45, which is one of the lesser value stocks in my portfolio. My market value for Oscar is going to be $89.54. And as you can see here, my total amount that I'm up on Oscar is going to be $14.54, or roughly around 19%. Now, this stock is up the most in my portfolio. And the reason for that is that I bought this stock primarily for growth. So I do expect this stock to have huge fluctuations as opposed to the dividend stocks and the value stocks, but I do expect it to grow even faster than all those other stocks. Currently, I have a reinvestment program with this, and for my DCA model, I'm only contributing $10 per month. The reason I'm contributing less money to this stock is because, one, I expect it to have a lot higher growth than the other stocks, and this stock is not as established as the other 8 that I have showed you so far. Now let's go ahead and jump into the last stock I have in my portfolio, which is going to be ticker NU, and that stands for New Holdings. So here we are on New, and for those of you who do not know, New is a fintech bank that operates outside of the US, and they should be getting their banking charter very soon to start operating in the US. This stock too, I went ahead and added it to the portfolio in order for me to get growth. The current share price is $15.15, and my return so far is going to be minus $1, or I'm down roughly 1%. My market value is going to be $93.98. And in all the 10 stocks in my portfolio, this is the only one I'm down thus far. As just like the other one, which is going to be Oscar, that's also here for growth, I am contributing $10 per month in order to keep growing my position in New. Now, what we're going to go ahead and do, we're going to go ahead and do a portfolio roundup to see how the portfolio has been doing since its inception. And the portfolio did start at the end of December. So if I go ahead and go to the 1 week outlook right here, we can see that the portfolio is up roughly $30 or 2.72%. Now, I did show you all the stocks in the portfolio. I did show you how some of them are up $2, some of them are up $5, some of them are up $10. But this is the compounding I was telling you about. The entire portfolio is up $30 on just a weekly basis, which is almost a 3% gain. Let's go ahead and jump into see how the portfolio did on the monthly basis. Now, on the monthly basis, this is at compounding once again. The portfolio is up $81.60, which represents an almost 8% gain in the past month since the inception of this portfolio. Now let's go over and hover over to the 3-month outlook. So with the 3-month outlook, the portfolio is up $52.79, which is roughly a 5% increase since inception. And lastly, the portfolio has been open now for more than 3 months. So now we could finally go ahead and use the year to date to see how it's been doing. So for the year to date, it's up $53.97, which is roughly 4.98%. So this one is the true identifying factor for the portfolio. Like I said, the portfolio is at all-time highs. We have never hit this amount before, which is $1,137. So since the portfolio has been initiated, the overall gain for the portfolio is going to be $53.96, which roughly is up 5%. Now, that is not too bad for having a portfolio that's on autopilot all the time. Once again, I start off this portfolio with $65. I contribute $250 every single month, and that $250 get divided into the 10 stocks I have in the portfolio. I need not do anything for this portfolio. I just keep watching it and monitor it. And when I have to make an update video for you guys, I go ahead and I see how the portfolio is doing. Hence, I love this portfolio and I like to call it the set it and forget it portfolio. Now, if you guys have any questions about the portfolio, the kind of stocks I have in the portfolio, or if you guys have any questions about the gains of the portfolio so far, then go ahead and let me know in the comments below. Now, if you have not already liked and subscribed to the video, then this is going to be a very good opportunity to go ahead and do so. Please make sure you go ahead and share this video with someone you think that's afraid to start investing because they may think they do not have enough money, or they may think that they don't know what they're doing. Maybe this video could inspire them to get started, not tomorrow, but today, right now. If you guys do not have a brokerage account yet, there are going to be links in the description below. You could go ahead and use one of my brokerage accounts that I use. It's going to help you out. It's also going to help out the channel. Now, until the next video, my primary goal on this channel is to give you as much information that I possibly can in order to keep helping you push your investments.